him about Mark Cuban. I don't know if you saw Mark Cuban said that he's now dumped or sold all of his Bitcoin, given that he no longer believes it's acting as a hedge against inflation or anything else. Argues gold is proven to be a better bet, and that Bitcoin has not acted the way it should if it's supposed to be digital gold. What say you?
Well, you know, on the one hand, I think Mark is right. Crypto's been disappointing because crypto should move with, you know, equity markets, and it should be rallying with software. Software has really started to rally big, and crypto hasn't moved. So I think there are what I call, quote, rage quitting, people selling here as if something is wrong. I mean, one, I think that's what always happens at the end of crypto winter. You know, if someone asks me, is the thesis for Bitcoin or Ethereum broken? You know, it's absolutely not, because one, the more work we do, and we're hearing it from founders like Palantir, Bitcoin and Ethereum are really the future of money, because mass and compute, or compute and energy, however Elon puts it, really are what's scarce, and you're going to need to control agent systems. And as AI systems evolve, right, we're now talking about using commerce and operating websites, you need decentralized identity and verification. That's really what crypto does. And we know Wall Street wants to go towards tokenization. It's a vast improvement in efficiency of actually how money moves, and it's an innovation. Well, that only happens on Bitcoin and Ethereum and other smart contracts. So the future isn't changed, but the spotlight today is, of course, on semis, memory, starting on software. But as people focus downstream into the future, that's really, I think, when the bid comes for Bitcoin and Ethereum.
Billionaire Mark Cuban just revealed he sold all of his Bitcoin. And the reason caught many investors completely off guard. Has one of crypto's biggest supporters lost faith? Or is something much bigger happening beneath the surface? Listen carefully.
I think Bitcoin has lost the plot. And when I started buying Bitcoin, and I've sold all of it, except not all of it, most of it, it was because when all the shit hit the fan, with the Iran war, and, you know, Bitcoin was always the best alternative to fiat currency losing its value. And I always thought it was a better version of gold than gold. Well, gold just blew up and went, you know, to $5,000. Bitcoin dropped. And every time the dollar dropped, Bitcoin should have gone up, you know, because if it's priced in dollars, it was cheaper. So anybody from around the world could go pay in dollars, and it just didn't do that.
Not such a hedge.
No, it's not the hedge that I expected it to be. And that was really disappointing. And so I'd say I'm more disappointed in Bitcoin, not as disappointed in Ethereum, and the rest, you know, the token stuff, the meme coins, garbage.
Oh, wow. This is actually surprising. But if we're being honest, the explanation doesn't completely add up. Gold had already been on a powerful run long before geopolitical tensions intensified, driven largely by central banks aggressively accumulating reserves at a pace we haven't seen in decades. So is there more to this story than meets the eye? What's even more interesting is what Tom Lee has been quietly suggesting. Historically, periods of heavy selling pressure often emerge after brutal crypto winters, when investors are exhausted and confidence is at its lowest. But here's the question nobody seems to be asking. Is Tom Lee hinting that Bitcoin may have already found its cycle bottom near $60,000? After falling nearly 40% from its October 2025 peak of $125,000, many believe the classic four-year cycle is playing out once again. Others argue the correction may already be behind us. Meanwhile, the S&P 500 continues pushing higher, recently reaching $7,600, with Tom Lee projecting a move towards $7,800 and beyond. Yet beneath the stock market optimism, Lee believes something much bigger is developing for Bitcoin and crypto. Not years from now, not sometime next cycle, something that could arrive far sooner than most investors expect. Let's dive into his latest insights and see what he thinks comes next.
Yeah, actually, market sentiment plays a huge role, because it's sort of essentially risk premia. But there are two proven ways to value crypto. One, of course, is just network usage, because wallets and activity per wallet still explain, like, even now, 87% of the rise of Bitcoin. So as long as more people use it and they're transacting it, the value of Bitcoin should go up. It's a network effect. And the second is the umbrella value of gold. You know, gold when it hits 5,000, if Bitcoin had the same network value as gold, and gold is not as scarce as Bitcoin, that would put Bitcoin at around 2 million. So to me, I think there's still two ways to look at the value. And of course, for Ethereum, it's been shown for every dollar of tokenized assets, you know, tokenized dollars or others, it's created $1 value for ETH, the coin. So if you believe Wall Street's going to tokenize, Ethereum's price should go up a lot.
What if the biggest opportunity in the market isn't what most investors are focused on today? While headlines continue to swing between recession fears and market euphoria, Tom Lee believes something far more significant may be quietly taking shape beneath the surface. He's not surprised by the recent turbulence. In fact, he expected 2026 to be filled with volatility, false signals, and head fakes designed to shake confidence. Yet despite the uncertainty, several powerful forces continue pushing in the opposite direction. America is rapidly becoming the center of the AI revolution. Energy independence is strengthening economic resilience, and corporate earnings are rising faster than many expected. These aren't just short-term catalysts. They may be the foundation of a much larger shift. But here's where it gets interesting. While skeptics warn that markets have already run too far, Lee sees a rare convergence of forces that may only happen once in a generation. Accelerating economic growth, massive AI-driven productivity gains, generational wealth transfers, and trillions of dollars potentially moving from private assets into public markets. That doesn't mean the path ahead will be smooth. Corrections, fear, and uncertainty will almost certainly remain. Yet if these trends continue to develop, the next 2 years may look very different from what most investors are currently preparing for. The question isn't whether volatility will disappear. The question is whether the market is quietly building toward one of the most powerful expansions of our lifetime.
I know it's been a tough market for folks. I mean, I'm not surprised. You know, we were kind of expecting 2026 to be a year where turbulence could happen and people would see head fakes. But there's still some really powerful tailwinds for America. You know, one is, of course, the AI story. And now we're learning about the energy independence, right? America can deal with high oil because we're not going to have a shortage of it. And then there's further tailwinds coming because as AI moves downstream, it's really benefiting American businesses. I think that's why S&P earnings came in for just the first quarter $10 higher. That's $40 for the year. And if you just put a 20 multiple, that adds 800 points to the S&P. So I think there's a lot of grounding for why stocks are able to recover. So it's, but you know, again, I think we still might have challenges between now and December. So I think everyone still needs to be vigilant, but generally bullish.
What did you say about the next 2 or 2.5 years being some of the best market activity that we've ever seen? You still feel that way? And that was not on this show. You said it somewhere else. But what is your forecast for the next 2 years, and what's it based on?
Well, I think a couple things are coming together, Joe, that are going to really support a few things that may only happen like once in our lifetime. One is I think the U.S. economic growth rate is actually starting to step up. You know, in other words, we could grow at 4%, and for a mature, largest economy in the world to start to accelerate growth, that's pretty astounding. The second is the U.S. is one of the biggest exporters of the most important tool in the next 10, 15 years, which is AI products. And that means we are a net, essentially, exporter of a high-value product. And there's so much capital, I think, misallocated today because so much of it is held in private alternatives, but it's going to move into the public market. So I do think that, plus the demographic tailwind of millennials and Gen Z adding to the workforce, but then also beginning to inherit generational wealth, I think that is going to set up for after 2026, perhaps, you know, like over the next 2 years, some of the biggest gains of the stock market in our lifetime.